All right, hello everyone. Just want to elaborate a little bit more on the action today because it was pretty negative. I think we're going to get a some more follow through on the downside. I'm sitting here with our website guinea pig, Dr. Puffinstein. Come on, Dr. Puff, say hello to everyone. Oh, he's a little nervous now. He's not talking, but I'm sure you'll hear him by the end of this video. Anyway, we have to understand the market is the sum of its parts, and different sectors or industries affect different things. Now, I'm going to show you why I think today was so weak. First of all, it's important to understand that the technology sector is the biggest sector in the market. These are all the sectors. We can see here, it's hard to believe energy is only 4.7%. Tech is 27%. Back when I first started, believe it or not, energy was the biggest sector in the market. And that was back in the 90s. But these are the parts of the puzzle. The S&P is the puzzle. So if you understand what's going on with these, it helps you decide or give you insight into where the S&P is going. And I know this is for spy traders, so I'm sure you're going to appreciate it. Now look at this. This is ugly. This is an ugly sell-off. And when we have a gap down like that, there tends to be some follow through. Now, there's a reason why this level here, 139.50, was support. It's because it was resistance. Resistance can turn into support because of seller's remorse. Investors who sold regret doing so. Yeah, say hi to everyone, Dr. Pubblesai. Investors who sold re- experience seller's remorse when the price goes higher, and a lot of them tell themselves, I'm going to buy my shares back, but I'm only going to do so if I can get them for the same price I sold them at. So we have remorseful sellers placing buy orders at their sell level. If there's enough of these buy orders, the level that was resistance can convert into support. And that's what happened for a few weeks. But now the support is broken. Notice how the price is below it. This isn't just symbolic. This actually shows us something about supply and demand. And every chart should be viewed with the or through the prism of supply and demand. So if a support level breaks, it tells us something. It tells us that the investors who created this support with the buy orders have left the market. They're out of the way. Oh, now Dr. Puffinstein's licking my hand. Oh, you're a good little puff boy. Yeah. So big break here of support in the biggest sector of the market. This really does not bode well. We finished at the lows of the day, but you can make money off of markets that are down. Just check out my videos. Check out how to profit in a bear market. Now let's go look within the technology sector. Just like there are different sectors in the broader market, the S&P 500, there are companies within the sectors. Here's our technology sector. Apple and Microsoft are together 44% of it. So they're half the sector, basically. They dominate it. So let's take a look at the action there. And the action in both of them is pretty ugly. And that's another reason why I think the market's going to go lower. And Dr. Puffinstein thinks so too, but he really doesn't care. As long as I give him a piece of romaine lettuce or an apple, he doesn't really care. Yeah, it must be a good life to be a guinea pig. Assuming you're not like part of an experiment somewhere. But if you guys are looking for a pet and you live in an apartment, don't get a dog. Get a guinea pig. I mean, if you live in an apartment in the city. All right, so here's Apple, and what happened here? We got to resistance, we couldn't break through, and we fell. Resistance is a large concentration of investors who are trying to sell at or close to the same price. Here it's about a 155. Eventually, if we don't get through, some of these sellers become anxious. They start to think, oh, gee, I'm not going to be able to sell my shares because there's other sellers around and they might offer their shares at a lower price than I do. So I'm going to have to reduce my price. And that causes like a snowball effect. We could see it here. So again, when a market's trading higher, there's not enough supply to fill all the demand. When we get up to a resistance level, all of a sudden the sellers come into the market. And there is enough supply or sell orders to fill all of the demand or buy orders. All right, Dr. Puff, you got to keep it down, okay? Or buy orders, or I'm sorry, there is enough sell orders to fulfill all of the buy orders. And investors start to look around and think like, oh, gee, I want to sell, but I get the sense that there are other sellers out there. That's why the market isn't moving higher anymore. And someone might say, you know what, I want to sell at 155, but I don't think I can, or I'm not sure, a little anxious. I'm going to go to 154. Someone else sees that person, and they're like, I'm going to go to 153. And we get this snowball effect. And here it took a little bit longer, but the same dynamics are playing out. We broke this uptrend. This is an ugly chart. To me, it's not a guarantee, and I'm not a mind reader or I don't have a crystal ball, but to me, this looks like the kind of action that's going to tells us we're going to go lower. And now the action in Microsoft is even uglier. Look at this. Microsoft has been in a free fall over the last week. And, it's amazing. You put on CNBC or Fox Business News or you go into some chat room and, it's like, yeah, whatever. No, they're all talking about dumb stuff. Instead of talking about, wow, look at the action here. So Microsoft and Apple are the two biggest companies that there are on our stock exchange based on market cap. And the action in each of them, and when I say action, I mean the way they're acting, the characteristics. These each have characteristics of a sell off that will probably continue. So make sure you check back. Well, actually, you don't have to check back because if you're watching this, you're part of our community. But yeah, that's it. These are two things to keep an eye on. All right. Thanks, everyone. I hope to see you soon.